Nvidia CEO Jensen Huang met with President Donald Trump at the White House just days before a planned trip to China for the chip designer's chief executive. For more on the latest from Nvidia, the only member of the $4 trillion market cap club. Let's welcome in now. Got Dan Ives, Wedbush Securities Managing Director, Global Head of Technology Research. Dan, it is good to see you, my friend. I love the look today, Dan. It does look like, you know what it looks like, Dan? It looks like I'm interrupting your tea time. So I'm gonna get through this interview. We're gonna get through it real fast. I feel like you got places to go. Let's start with Nvidia, Dan. Nvidia CEO Jensen Huang, he's on the way to China. We know there, Dan, he can't sell his latest and greatest chips, right? And it's costing his company a lot of money. I'm curious how you think this all plays out. Does he get Trump to reverse course? Does he find a workaround? What do you see ahead?
I mean, he's not going to the White House just to have lemonade with Trump. I mean, the point is, our view is that the restrictions when it comes to China, a lot of that ultimately will at some extent be lifted where Nvidia can sell their chips into China. Remember, I mean, they're not going to just give $8 billion a quarter to Huawei on a silver platter. And it's all part of this negotiation that you see. But there's only one chip in the world fueling the AI revolution, and it's led by the godfather of AI, Jensen Nvidia.
If he can't sell his latest and greatest in China, Dan, how does he make that up? Could demand from the sovereigns, the Saudis, the UAE, could that make it up?
Look, that can make it up. And I still think Street's underestimating growth by 20, 30% in the next few years. But you do not want to give China just away to Huawei. I mean, where Nvidia can't touch it. And they know, and Jensen knows, that continues to be the biggest market incrementally that they're going after besides the US. And it's all part of this negotiation. You cannot just hand that business to Huawei. And that's why, look, it's all part of this high stakes negotiation. But there's only one chip in the world that's fueling it. And Trump knows a big poker chip that he has in negotiations is Nvidia.
I'm sure there are some viewers, Dan, this week, when they saw Nvidia hit that milestone, right? They might have thought, hey, I missed my chance, I missed my opportunity. I know you feel differently. What are the catalysts that keep this one, in your opinion, moving higher?
I think 5 trillion and beyond are next, because it's my view, we're in a golden age for tech. It's led by Nvidia, but it's speaking to the AI revolution. I mean, behind the velvet ropes, they're gonna let Microsoft into the $4 trillion market cap club as well. When it comes to Nvidia, this is still just the beginning of a 3-year tech bull market, and it's being led by Jensen.
Let's switch gears to another name I know you like, Dan, and that would be Tesla. You like the name. You don't seem happy with Elon Musk and how he's spending his time. He's right back into politics, right? Full speed ahead. He's going to create this American political party, this new political party. You laid out changes you want from the Tesla board, Dan. You say new pay package for Musk to 25% voting control, guardrails for the amount of time Musk spends at Tesla, and oversight in political endeavors. Does any of that actually happen, Dan? What odds would you give it?
Yeah, and obviously Musk didn't like, what we laid out. I believe the odds of that happening are ultimately just some combination more than 50% in terms of that. And especially when it comes to 25% voting right, what I view as an XAI merger, to me, that is ultimately sort of the next stage to where we see this all heading.
I have to ask you, Dan, only because we're showing the post there. When you lay this out, Elon Musk says, shut up, Dan. So the owner of X, on X, guy's worth $400 billion. He tells you to shut up. You saw that, Dan? What did you think and feel when you saw it?
Look, I mean, I knew Elon and knowing, for 20 years and him and following Tesla and being such a big support, he wasn't going to like it. But again, friends could disagree, right? And so hopefully, over the coming months, we're able to work out our differences. But as one of the biggest supporters of Tesla, we needed to do that. Given our view, that's what the board needs to do to ultimately move this forward. Tesla's going into its biggest stage of growth ever in autonomous and robotics. Musk needs Tesla, and ultimately the biggest asset continues to be Elon.
So you had your criticism there, Dan. It's important to note you remain bullish. You tell your clients here at Wedbush, they ask you what to do with it. You say, listen, this one's an outperform. It's still a buy. What would you need to see, Dan? What would have to happen for you to rethink that rating?
Look, I mean, to me, it just continues to sort of be this is going to be one of the biggest winners in AI along with Nvidia. So for me to get bearish, I don't see it relative to everything we see in front of us when it comes to autonomous.
Finally, Dan, another ticker. I got to get this one in. Let's talk Apple. Another name you like, right? The team at Lightshed made some news this week with a provocative report. I know you saw this, where they were asking, is it time for a new CEO at Apple? You know that company well. You know the CEO well. What's your response to that question?
Cook continues to be the Hall of Fame CEO. He will lead Apple, I believe, at least the next 5 years. That said, AI revolution can pass Apple by. I believe the time's come for them to make an acquisition in terms of Perplexity. And I think that's different. It's Cook reading the room on this next chapter. Because look, you miss AI, that would taint a big part of his legacy if you miss the AI revolution.
That would be a hard shift to do an acquisition like that, Dan. I mean, you know, Apple does do, you know, acquisitions, but traditionally they stay small. I think the biggest one they ever did was Beats for $3 billion. What kind of odds would you give that they would make a move? Perplexity, I think, valued at around $14 billion, I believe.
I believe they don't have a choice. They have to do a deal. I get the DNA of Cupertino. We could build it better than them. But it comes down to, it's like a baseball player in a slump. You got to change your bat, right? Mantle, Cobb, Garrett. You know, you go back, Babe. They change their bat. Cook, it's time to change. Need to do Perplexity, in my opinion.
Finally, Palantir, messy of AI, as you put it, Dan. You raised your target. You go to 160. You're doing your checks, and obviously you like what you see. What are you seeing? What are you hearing?
The AI revolution is being led by Nvidia and Microsoft, but Palantir, they're going to be one of the core players. I think it's $1 trillion company in the next 2 to 3 years. And look, the haters will hate, but it's just the beginning of the use cases playing out on enterprise, on government. That's being led by CARP, and that's why, you know, there's only one Messi of AI, and it's PLTR.
What do you say to the skeptics, Dan, the bears, who will say, listen, and they've been on this show, and I've asked them, they'll say, listen, I like the tech, they'll tell me. I like the fundamentals. I don't like the valuation. It's an irrational valuation is how they'll put it. They'll say that these levels, the risk reward does not look attractive. What's your response?
The bears are in hibernation mode, and in their spreadsheets, they can see AI. And if you focus just on valuation, you missed every transformational growth stock the last 20 years. And Palantir, they hated 15, despised it 50, yelling at 100. It's going to continue. Again, it's like right now, this is being what I view as one of the best AI plays in the world.
I know you tell your clients to say this one on the path, you argue, to become the next Oracle.
It's the next Oracle, the $1 trillion path. They're in a left lane, a Ferrari going 100 miles an hour. A lot of the competition's in a minivan going 45 miles an hour right lane.
Dan, always good to see you. Always good to have you on the show. Thank you, sir.
Thank you.
Mixed bag of emotions for tech investors in the first half of the year, but still the sector is up 10% year to date if you look at the XLK. Dan Ives, Wedbush Securities Managing Director and Global Head of Technology Research, is with me now. Dan, you're never a mixed bag of emotions. You are usually a very positive guy when it comes to the sector you cover. And no surprise, you think that we are going to continue to gain here. What do you think is going to be the catalyst for a continued rally in some of these large cap tech stocks?
Yeah, and look, to me, Julie, it's the next step of the AI revolution. Because when you think about what's happening now on software, on consumer, on autonomous, physical AI, robotics, we're just in the beginning. I mean, you're really just in, call it what, 2-3% through what's going to be really what I believe not just the bull market, but this cycle of spending is going to go on for the next 8-10 years.
And what is that going to look like? I think we're all still kind of trying to figure that out, Dan. I mean, you're really steeped in these companies, so it seems like, you know, it's making some progress on the enterprise side, if not as much on the consumer side, maybe. But what does it look like to you?
And look, I'd say on the enterprise, also remember only 5% of enterprise have even gone down this path. And that's only in the US, none in Europe, none in Asia, ex-China. So just think about how early days we are, and that sovereigns is just starting to play out. I think on the enterprise, that's a year and a half ahead of the consumer. But really, if you look at Meta, to everything we see, what's going to be on the advertising side, to the hundreds of apps that are going to be built in terms of AI, to robotics, to autonomous, the consumer, when it comes to ChatGPT and Perplexity and the models, that's just the beginning. That's almost like a baby relative to what we're going to actually see when it comes to AI. And that's why we believe, I mean, we're going to be talking about NASDAQ 22,000, 25,000, 30,000 over the coming years.
Dan, you are now in the ETF game. You've lent your last name to an ETF that includes many of these picks. And I can't help but think of sort of the mother of disruptive tech ETFs, Cathie Wood, and her ARK Innovation ETF, which has done very well this year, but as you know, has had a lot of ups and downs because these disruptive tech names, they don't always do great versus the market, right?
Sure.
And sometimes these disruptive technologies don't work out or don't work out on the timeline that you think they're going to work out on. So when you're sort of applying your criteria to these stocks and trying to figure out what's going to outperform, how do you think through that and some of the risks and some of the timing and cadence of all of this?
It's a great question. Look, and it speaks to the Ives AI 30 report that the ETF's all built on in terms of Ives. Look, if I focused on what a stock's going to do over the next month, 2 months, in terms of gyrations, geopolitical, maybe even earnings, right, where they could be soft in terms of conservative on guidance, you never would even go into this. My point is, we are in a fourth industrial revolution. And I believe it's the biggest technology theme we've seen in the last 40, 50 years. I'm focused on companies, not just, of course, godfather of AI, Jensen, Nvidia, Palantir, Microsoft, and a lot of the bigger names, but who are the second, third, fourth derivatives of AI in software, in consumer, in cybersecurity? And that's the vehicle. It's a way to play the theme that's going to be trillions spent over the coming years.
Dan, I want to get you to pause for just a second because I have David Miller of Catalyst Funds here with me on set, and I'm curious to get his take as well. David, as you hear Dan talking about this sort of fourth industrial revolution and trying to figure out who the winners could be in AI, as you're applying your investment criteria, how do you think through some of these themes and how heavily do you think investors should be sort of indexed to some of these players?
Yeah, so I guess I fully agree with his thesis. We just have a slightly different angle on it. So we have this ETF that we recently launched. It's called the Monopoly ETF, ticker MPLY. And the idea is we're not necessarily trying to identify who's going to be the next big winner. We're trying to identify who is already the big winner that's going to continue winning, that has extraordinary dominance, extraordinary margins, great free cash flows. And I think that's a much easier game to play. And when you look at it with AI in particular, it's easy to see that Nvidia is a big winner. And many of the hyperscalers have been spending an incredible amount of money that's going to Nvidia. But then if you look at a company like a ServiceNow or a Meta, you can see that their earnings have been absolutely exploding with AI. People were very concerned about Meta years ago when Apple refused to share data with them. That's completely irrelevant now. The data that Meta is getting now from AI that gives them the ability to optimize their ads is infinitely more valuable for getting higher CPMs on their advertising than what they were getting from Apple years ago. If you look at a ServiceNow and their ability to automate customer service and make things more efficient, you can think about it as a lot more spending on AI over the next several years. But I think the much bigger way to think about it is how much additional productivity do we get when we have all the world's knowledge at our fingertips and we can use the compute to actually solve those problems using that knowledge. And I think people generally have a kind of difficult time thinking exponentially as to what that can really mean. And certainly that happened with the internet, but I think you can certainly see that happening again, but probably even bigger with AI. It's hard to imagine that we won't be using tech more 5-10 years from now than we are today.
Yeah, Dan, I think same page, same page. I'm sensing probably from you guys. I mean, I know you like in terms of your picks for the second half of the year, Dan, you're looking at Nvidia, you're looking at Meta, which you mentioned already, you're looking at Microsoft, which is trading at a record again, you're looking at Palantir, ditto, and you're looking at Tesla is the other one. Tesla, I feel like, is like one of these things is not like the other, certainly in terms of the stock performance at least, but just briefly here, the second half of the year, why are you focusing on those five?
Because, I mean, ultimately, it's each phase of what I think is starting to play out. Of course, Nvidia, not just 4 trillion, I think it's the path to 5 trillion market cap. And then you look at on the hyperscaler side in terms of Microsoft, Meta leading on the consumer, Palantir, I think that's $1 trillion market cap in the next 2 to 3 years. And Tesla, I've used the best AI play along with Nvidia, because autonomous worth $1 trillion of the story. And it all comes down to those that focus on valuation. You know, they've missed every transformational tech stock the last 20 years. And I always say, like, the bears, when they're in hibernation mode in their caves, they can't find AI in the spreadsheet.
I mean, David, I would ask as well, though, on the flip side, or I guess I'll put this to both of you. David, I'll put this to you first. Given how heavily weighted these companies are in the S&P 500, why should investors just buy the S&P 500? They still can participate in a lot of the upside from these stocks because they are so heavily weighted, but they also get maybe the cushion of some of the other stuff. David, how do you think about that?
So I guess the way I would think about that is, first off, I agree you're generally right. You're probably going to do very well if you own the S&P 500. And if you don't own these names individually, that's not the end of the world. But do you really need to own the large airlines, which have never made money over decades on net? Do you need to own the large automakers that aren't Tesla, that are incredibly difficult businesses with enormous pension liabilities? I think conceptually you do want to own a lot of those names that are in the S&P 500 that are showing great free cash flow growth, great dominance within their industries, great products that are making people's lives better. But you don't have to really own some of those companies in the S&P that are in much more competitive industries.
And Dan, what about you?
I mean, I think David, it's a great way to put it. I put it another way. I mean, I just say I want to own the Ferraris in the left lane going 100 miles an hour. I get every once in a while you'll get a speeding ticket, but I don't want to own the minivans in the right lane going to 45 miles an hour with a broken radio. I'd rather be in the left lane owning those. And those, to me, that's where you stick in big tech, and that's why I think it's get the popcorn out. It's going to be a very exciting second half.
Dan Ives, the king of analogies, the king of fancy sport coats. Thank you so much for being here, my friend. Have a great holiday.
You too.
Let's take a look at the AI trade. It's booming right now. Nvidia shares hitting an all-time high in the stock on an upward swing since its strong earnings report in May, seeing a big turnaround from earlier this year. Joining me now, we've got Dan Ives, Wedbush Securities Managing Director and Global Head of Technology Research. Dan, great to have you on the program with us. We saw strong third quarter results from Micron, boosted by AI demand. So how does this factor into the broader AI trade and add just another thought in the frame of mind for some of the Nvidia investors out there as well?
I mean, there's one chip fueling the AI revolution, and that's Nvidia. And I think investors are starting to recognize we haven't even seen the biggest growth driver yet of AI, not just on enterprise and the use cases, but on the consumer side and ultimately autonomous and robotics. And this is, in my view, it's not just 4 trillion. I mean, we're going to be looking at a $5 trillion market cap in Nvidia.
And so at what point, what's the kind of modeling and the time frame that you're kind of anticipating that could come to fruition?
Street's still underestimating growth longer term, I think by 15 to 20%. That could be conservative. I think when you actually see the dynamics playing out today, remember, they took China basically out of their forecast. And if you have any trade deal, a big chip on the table is Nvidia, and I believe they're not going to hand that business on a silver platter to Huawei. So I think right now investors are starting to recognize the growth opportunities for Nvidia, and we've talked about demand to supply 10 to 1.
And so as we're thinking about that, and you mentioned China, one of the major factors within any type of trade deal is going to be IP, that intellectual property. what is the likelihood that we see an outcome on the intellectual property front that is favorable for Nvidia, and what does that do in terms of unlocking some of that addressable market?
I think probably less for Nvidia from an IP perspective. I think the bigger issue from an IP, especially a lot of the software players, that's been the big issue when it comes to China. But look, there's a give and take here. And the reality is that Jensen wants that business back. He's talked about it. And, when you think about it, 8 billion a quarter, but eventually that could be 10, 12 billion a quarter. But China, they know that there's only one chip in the world fueling AI revolution. That's the godfather of AI, Jensen, Nvidia.
We've heard some really strong calls for even $6 trillion market caps for Nvidia here. What is, you think, the critical kind of checklist in order for us to get to that point?
I think checklist is, and just take all the geopolitical out for a second, but I think first it's the use cases that are now exploding. And we're seeing that in the hyperscale and Microsoft, of course, names like Palantir, which continues to be one of our top names. Then it's the consumer piece, everything Zuckerberg and Meta's doing, what we're seeing with Alphabet and others, because that's a whole nother leg to the stool in terms of the consumer side. And then the holy grail, autonomous, robotics, humanoids, that's not even being factored in here today.
And so you mentioned a few of the other themes that I wanted to get to as well here. You, of course, are tracking Palantir and another name that's seen new record highs. What do you think is really contributing to the mindset around the trading and the thesis for Palantir right now?
Look, I mean, they hate it at 20, despise it at 70, call it expensive at 100, right? I mean, now the bear is 145 because, as we always say, they can't find AI in the spreadsheets when they're in hibernation mode. Palantir, we view as $1 trillion market cap next 2 to 3 years. There's no company from a software perspective that has what they have. And I think now as they go further and further after the enterprise, as sovereigns go down the AI path, this is just the beginning of what's going to be a golden age of Palantir. And I think, look, is it expensive today? Of course. But if you look out 2, 3, 4 years, I mean, we're going to be talking about one of the most transformational companies in the world.
And so within that transformation, they also might need to see a transformation of their own that you started to allude to there. And I just want to hit on that because they often talk about how much their contracts are intertwined with government entities. To what extent do you think we see that start to accelerate towards large enterprises with large recurring run rates as well?
Yeah, and look, that's been a huge part of the valuation uplift that we've seen over the last 18, 24 months, because now more and more they're an enterprise play. Government never really get a multiple, just given the nature of contracts. Now in the enterprise, there's no AI bake-off that Palantir is not front and center. Either they won or they're going to be at top of the list. And I think that's really been the difference maker, is on the enterprise, and investors recognizing they're one of the biggest disruptive technology companies in the world, along with Nvidia, along with Tesla, and I think this is just the beginning of that next chapter.
While we have you here as well, we were taking a look at one of your other notes, specifically around Microsoft right now, and it's amazingly and kind of befuddling sometimes how it's not the sexiest stock out there, yet it continues to show how it is a powerhouse that can chug through any environment here. So as we're thinking about how Microsoft can differentiate itself within an era where they've already been early investors in generative AI and trying to figure out where they need to further entrench some of their market positioning there, what do you think is the next critical leg that Microsoft needs to implement in order to see that realized within their results?
Yeah, great question. I think it's, look, the commercial cloud business, Azure, the AI stack. I mean, this is right in their backyard. Look, of course, Amazon, Google, they're going to continue to have success, but no one understands it better than Nadella. And I think that is something the street is still underestimating. We talk about 25 billion incremental growth into next year. The street's not even factoring in. And that's why I always say, like, this is a name, if you look at it traditional glasses of an old Microsoft, that's not just the way to think about it. You have to, when you look at names like Microsoft, IBM, Oracle, these are transformations that are happening today in terms of the install base and the AI stack. And that's why these stocks are doing what they're doing.
Within that, we also know that up against Google and their own cloud product, and then additionally against Amazon and AWS, what type of market share, not shifting, but stealing of that market share, are you seeing in terms of the jousting between these three major players on that cloud front?
Yeah, I mean, to put it, look, if you think Amazon, let's say 6 or 7 of every 10 deals, right? They essentially, from a cloud perspective, because they were first mover, basically owned. And now, as you think about more and more customers move into AI, move into the stack, think about that 7 of 10, it's kind of reversed. I think Microsoft, 7 of every 10 cloud, from a hyperscale perspective, they're winning. That's the difference. It's kind of been reversed. No, Jassy is clearly going after, it's going to have success. Google and Curry and what they're doing as well. But Brett, this is Redmond's backyard in terms of the enterprise. And I think that is why they're so successful, because these are install-based customers and they have the full stack from 365 to Azure to Copilot.
Dan, just lastly while we have you, and I got to be brief, just going to throw it out there. Cybersecurity in the age of geopolitical conflict, how much more do you think that gets the mind of investors, considering what we've watched play out over the last several weeks here? And, oh yeah, by the way, we still have a deadline that's looming on the tariff policy front as well.
Just another talent for CyberArk, Palo, CrowdStrike, Zscaler. Even when you talk about retaliatory, we saw that with Iran, or retaliatory cyber toward U.S. Israel, it benefits cybersecurity companies. That's why it's going to continue to be, I think, probably the biggest outperformer within broader tech. And that's why we also have a bunch of cybersecurity in our Ives AI 30, because that's the second, third derivative of AI.
And then, Dan, just lastly here, because, and I do want to get to our next guest, who is sitting on set with me. And one of the questions that he slid me, Thomas Hayes, who I'm sure you know well as well, he slid me a question saying there's 10-to-1 demand to supply for Nvidia on the chips front. Do we need more progress on fabrication, especially considering TSMC and Intel right now, to help fulfill some of that demand?
That's a great, and he's great, and that's a great question. It's true. I mean, because ultimately you need more supply, you need more production. The problem is, like, look, Intel, I mean, they're stuck in that right lane, 45 miles an hour in a minivan, right? Like, so that's part of the problem. But it's a demand supply issue. Demand's not the problem, it's supply.
All right, Dan, thank you so much for taking the time here with us just after the opening bell. We appreciate it.
Well, for more on the Trump versus Musk fallout, let's welcome in here Dan Ives, Wedbush Securities Managing Director and Global Head of Technology Research. Dan, it is always great to see you. So Trump and Musk, Dan, the bromance, the breakup, you look at Tesla stock, as Julie was just pointing out, it's moving higher today, but it got whacked yesterday, Dan. And I want to ask you, when you saw that reaction in the stock, what did you think, Dan? Did you think that move was justified? Did you think it was an overreaction? What were you telling clients?
I mean, look, Josh, I thought it was a shock, almost Rod Serling, Twilight Zone, sort of, that Musk and Trump went from BFFs to this frenemy situation, right? It's almost like a junior high sort of fight that's happened between these friends. And I think it caught investors off guard, because you knew Musk was pulling away, but you didn't think that this was actually going to start really a battle where a friend could become an enemy. And that's a cascade effect, because investors were worried, if Trump becomes an enemy, not a supporter, in terms of the autonomous roadmap. I think that was an overreaction, but that's why investors were fearing it.
Well, and Dan, does it also remind investors of what looks, from some angles, maybe from many angles, like Musk's instability, right? We, of course, recently had that story in the New York Times that said his drug use during the campaign was, more extensive than had been understood before. Then you see this sort of lashing out against the president. I mean, do you think that there is really solid investor confidence in his leadership?
Yeah, and Julie, look, I mean, to me, Musk is not going to be someone that's drinking tea and doing a cartoon puzzle at night. So I think investors they understand who Musk is, whether you love him or hate him. So I think they're able to kind of see through that in terms of some of these controversies. Now, in terms of here with Musk, look, at the end of the day, no one wants Trump as an enemy to Musk. You want him as a friend. And that's why I think behind the scenes right now, there's a calm, right? I think maybe, hopefully cooler heads prevail, intermediaries, because at the end of the day, Musk needs Trump, needs Musk.
I don't know. I mean, I think tea and a cartoon puzzle sounds lovely to me, Dan. But
Josh,
different strokes.
especially wearing a sports jacket, like a bullish sports jacket like that, you could pull that off,
Absolutely.
but not Musk.
No one doubts that. Let me ask you.
Wait a minute, wearing a shirt like that, Dan, what does that tell us then about your consumption habits? I don't know.
That's not tea and cartoon puzzle. That's a whole nother, that's a whole different vibe. Let me ask you, Dan, did you think, though, in all seriousness, that this drama, does it overshadow in any way, Dan, some of the reasons I think you can argue you saw this move in the stock off those April lows, specifically Musk's return to Tesla and the robo-taxi event next week?
Yeah, Jack, look, if you think this is going to get worse and worse, and then Trump ultimately puts blockades in, the state doesn't go to federal, the autonomous roadmap doesn't happen, that's our whole view. That's how you're going to have cybercap 25 or 30 cities over the next year. Okay, then it's a negative view. But my view here is that this is basically a frenemy junior high school battle that's happening here. I don't view it as a long term. I still believe they're allies, and it doesn't change my view that the regulatory roadmap is going to be more green lighted for Tesla and the autonomous. It could also help Waymo and others. But that's where I think we're going. And that's sort of my view. I don't think that this is the beginning of a dark storm between Musk and Trump.
By the same token, it does seem like the EV tax credits are going to be in the tax bill. That is something, just if you talk in pure dollars and cents, is going to take away from the company's earnings this year, right? So, I mean, are you baking that in as the base case to your models at this point?
Yeah, and Julie, coming into the year, we thought that. I mean, I think they were, and my view is always, it will hurt Tesla, but hurt Tesla less than competitors. So ultimately, they do actually, to some extent, given their scale and scope, they could be profitable selling $35,000 cars. You can't say the same for those in Detroit in terms of big three. Now, do they want it? They don't. I mean, Musk doesn't want the 7,500 credit to go away. But I do also believe now that he's out of the White House, he has to play a game of politics here too. Because there's a broader game going on. As he distances himself from Trump, that makes him more positive in Beijing. And China is very, very important to Tesla, raw materials, production, demand.
Well,
so there's a lot of sort of 4D, chess going on too.
I don't know. I'm always suspicious of the 4D chess comparison when it comes to people in Washington. But I do want to pick up on the China angle that you mentioned, Dan, because there was a report out of Reuters today that China had given sort of temporary licenses for rare earth mineral export to the main automakers, but not to Tesla. According to that report, it was Ford, GM, Stellantis that got it, but Tesla did not. Is that something that's going to disadvantage them?
Yeah, I think the devil's in the details. I do believe, given what we see with Tesla in Shanghai, given their production footprint, I think they'll have that same access. I'm not sure if it's from a timing perspective, but Tesla actually has an advantage when it comes to because they're so cemented in China. And I think when it comes to for Musk, look, this is like a road to recovery. I mean, post-Doge, post a dark chapter, I think he's made great moves. Obviously, next week's a huge move in terms of autonomous and the Tesla, in Austin and that sort of ramp. But in terms of what we see with Musk and Trump, it's two kids in the sandbox. A little bad, but eventually I think the play date's back on.
Dan, I want to switch gears, talk about another name you covered. That would be Apple. Their big software show starts on Monday. I believe you will be there, Dan. I think it's fair to say expectations tempered on this one, Dan, but what do you expect to hear as an analyst who remains, I know, firmly bullish on this name?
Yeah. And Josh, you've been in so many of those over the years. I mean, my view is low bar, but at the end of the day, the developers are the hearts and lungs of Apple and the Cupertino ecosystem. I think right now sentiment is way too negative on Apple. The consumer AI revolution, it's our view, like that goes through Cupertino. And I think as you look at this next iOS update, it all sort of sets up for what's going to be the big Apple intelligence in 2026, the early part. And I think this is going to be the upgrade cycle. It's late to the game, but with an install base of 2.4 billion iOS devices, 1.5 billion.
For more on what's ahead for Tesla sales as Elon Musk prepares to make a full return to the company, let's get to longtime bull Dan Ives, Wedbush Securities Managing Director. Dan, it's great to see you here. So draw the line for me, if you would. What does Elon coming back to the company full time do for European sales? How does he fix that problem?
Look, I mean, I think the biggest thing with Musk coming back is around leading the autonomous vision. I mean, to me, that in terms of the AI vision when it comes to autonomous robotics, I think that's the most important. And that's 9% of the future value. In terms of Europe, China, US, look, Musk being there in terms of, look, first off, the brand damage, I believe now is contained, and most of that is in the rearview mirror with him at the Trump administration. But then it's going to be about rebound in sales in these regions, guiding to the next page of growth. But Julie, I mean, to me, the biggest thing here, it's much more about what happens in Austin late next week than Europe sales down in a month.
Well, but it's still how they make most of their money, right? The vast majority of their money is made from selling cars. When does that rebound happen? Do we have to get to a year out where they're going to be lapping these declines? Or do you see some kind of rebound happening this year?
Yeah, look, I think second half of the year, you'll see a rebound in China, a stabilization in Europe. So, I mean, we'll call it less bad specifically in terms of some of the other countries. And then I think in the US, I think you'll start to see a rebound, especially with some of the refreshers starting in 3Q. So you combine that with what ultimately we see when it comes to autonomous and robotics. I believe a golden age is ahead for Tesla. And that's why we don't worry too much in terms of month to month, some of these things that we're seeing coming out of Europe, relative to our bullish view where this is heading over the coming years.
And Dan, if you look at the stock, it's had a nice move over the past month. I mean, it's up about 20% here. What do you chalk that move up to, Dan? Is that the Musk return? Is it the robo-taxis coming to Austin that you're referencing?
I think it's the Musk return, right? I mean, it all goes back to, we've talked about it. We were doing Julie in the show. Once Musk recommitted to Tesla, days in the White House were done, Tesla got back its biggest asset. And then that coincides with what I view as the biggest error for Tesla in its history in terms of the AI future. I think when it comes to autonomous robotics, I think autonomous alone is worth $1 trillion to the market cap value. And I ultimately believe there's a $2 trillion market cap.
I have to ask you about this Reuters report that came out today. I don't know if you saw this, Dan, but I'm sure you remember last year, Reuters reported that Tesla had abandoned its project of developing a cheaper alternative, right? A cheaper model. And Musk came out and tweeted, Reuters is lying. And the Reuters report today says internally there was mass confusion among management because they had abandoned the plan. And so they were like, but wait, does that mean it's back on? What's going on? And I ask about this because it speaks to the ongoing issue about Musk's credibility, whether it's internal or external, to investors. So he's obviously put a lot of eggs into this autonomous basket, into this cyber taxi basket. How do we know if we can believe him that it's going to work?
Yeah, but Julie, I think to that point, that's why this is such a key few weeks, few months, and I think a year ahead, because it's not just about what we see in Austin. It's about the 15, 20, 30 cities that I see robotaxiing over the next year. I mean, that this just starts, the birth of that vision starts next week. And to your point, look, there's going to be many that will be skeptical. But I mean, Musk and Tesla have been here before, backed against the wall, proven it again and again. And to that point, in terms of the lower cost vehicle, look, I think that was a decision they had to make. In other words, do you go after, what we'll call it the next gen skateboard and vehicle? I think they decided basically to do a more of a refreshed, cheaper Model Y. But I don't think that that's done. In other words, that cheaper sub $35,000 vehicle will still come, just not when investors thought.
And Dan, we're talking Tesla. I also want to get your thoughts on another big name you cover, which is Apple. Their big software show, WWDC, that kicks off next Monday. Dan, what do you expect to hear at that show? Dan, what do you want to hear?
Yeah, and look, and you know it so well, Josh, in terms of Apple. What we expect to hear is laying out the framework and the guardrails and the vision for developers for the AI strategy. I mean, if you go back to a year ago, obviously there were definitely a lot of speed bumps to where we are today. It's given developers what the roadmap and the framework is. When you look out next year, and that's the most important thing, is the hearts and lungs of Apple. Look, Apple obviously is caught, in tariff sort of storm here, but to me, I mean, that doesn't change my medium or long-term view of Apple. I mean, you still have best install base in the world, 2.4 billion iOS devices, 1.5 billion iPhones, and the developer network that continues to be, I mean, that's who Cook's talking to next week. And I think that's the important thing, because the consumer AI revolution goes through Cupertino. The enterprise AI revolution goes through Nvidia, Palantir, obviously others. Consumer AI revolution goes through Cupertino, in my opinion.
And so let me ask you, Dan, because I don't think I got your take on this. When you heard, by the way, that Sam Altman and OpenAI were buying one of Johnny Ives' startups, Johnny Ive, legendary, of course, Apple design guru, how much of it all do you consider that a threat to Apple?
See, I don't view it as a threat. I just view it as the strong are going to continue to get stronger. Big tech, I mean, no. Look, even though like OpenAI obviously partners with Apple, I mean, when you think about it, no one is going to just sit here on the treadmill. Everyone's going to look to acquire, because it's an arms race. It's the fourth industrial revolution. I don't view that as competitive, but it speaks to Alma and OpenAI. They're not just going to look at where they are today. How they get stronger? Alphabet's doing the same thing. Microsoft as well. And I think Apple, this is a key moment for them to basically say, don't forget about us when it comes to AI.
Dan, always great to see you and to have you on the show, my friend. Thank you.
Thanks.
Big tech stocks leading market gains today, with the NASDAQ 100 officially wiping out year-to-date losses. The Magnificent Seven adding more than $800 billion in market value following the deal between the U.S. and China to temporarily reduce tariffs. Joining us now with more, Dan Ives, Wedbush Securities Global Head of Technology Research. Dan, great to have you as always. I know you say this truce is the best case scenario. Which tech stock is the biggest winner within that scenario?
I think it's Apple and Nvidia. I mean, if you look at this, that was the black cloud, right? I mean, the supply chain hearts and lungs are in China. And as much as you could talk about moving to India and others, this is a huge sigh of relief. And I think it changes our view that, new highs for tech, new highs for the market, now on the table after what we just view as a dream scenario happened this weekend.
Well, Dan, let's talk about Apple a little bit. I know you had a call for a $3,500 iPhone if production was brought back to the United States. What's your call on the price of an iPhone today?
And look, it comes down to I mean, they're going to have to struggle not to raise prices if they don't get exemptions and you actually keep some sort of tariff in when it comes to China. Look, it all comes down to the reality is iPhones need to be made in China. Some can be made in India. They can never really be made in the US. Because if you want them made in the US, the price points would basically be massive demand destruction on day one. And it would take 4 to 5 years to even build 10% of that in the US. So that's why our whole point over the last, call it 6 weeks, was let's talk reality versus fairy tale. And the reality is that iPhones will continue to be built in China, with some being built in India.
How do you suss out the reality versus a negotiation, a framework, a thinking of a deal when there isn't necessarily clarity yet on the goal of these tariffs?
Look, I think ultimately they're both playing poker, and especially U.S. They look at their hand; it's not a good hand, right? And I think they had to move further and further back from the cliff, in terms of what we saw with the delay of the reciprocal, and obviously when it came to China, because the cargo data doesn't lie, and the price points doesn't lie. And whatever CEOs are saying publicly behind closed doors, what they're telling the White House is you need to change, you need to move. So our view is like even when it comes to the 30%, I mean, that's probably the high bar. It goes to what call it a reciprocal 15%, 20%. Once you work out WTO, IP, and all the other issues are going to have to get worked out over the next year. But you don't want a decoupling when it comes to AI revolution. And I think this was, a potential black swan moment that was self-created that's no longer there.
And Dan, my guest host Lou Bassanese has a question for you.
So Dan, I just want to talk to you more about Apple. I feel like early in the show I said this time of year everyone gets a bit negative on Apple. How worried are you about price sensitivity, right? I mean, the consumer is super loyal to Apple, 2.5 billion devices out there. You got a lot of subsidies. Does it really matter if the iPhone price is a little bit higher than it was expected? I mean, do you really think that impacts demand?
Yeah, no, it's a great question. Look, I mean, the last thing Apple wants to do is raise prices. And they've kept prices basically the same. The reason that is because you have, call it 300 million iPhones that haven't upgraded in 4 years. So even if it's 3%, 4%, 5% of that may be delay for a year because of a $100 increase or $150. That's not what Apple wants, but they're beholden to their supply chain. But when it comes to going into WWDC and iPhone 17 and obviously AI, I mean, this is a key period for them to actually see growth in terms of high single-digit, double-digit growth, which is obviously evaded, in terms of the Apple story over the last few years.
Dan, one quick follow-up. Earlier in the show, I said that Mag 7 was a boy band like NSYNC that's breaking up. Who would be
and
your...
I love NSYNC.
Yeah, look, who would be your Justin Timberlake, though, for breakout? You said Apple and Nvidia. If you had to pick one for the best breakout for investors right now, which one are you most optimistic about on the aftermath of these trade truce?
If there was like a Timberlake part of NSYNC breaking out, it would have to be Nvidia. I mean, and look, Jensen, we'll see what happens with the black leather jacket if he had to, make it to be a boy band. But look, I think the reality is that I think it makes all new all-time highs because there's only one ship in the world fueling the AI revolution, and that's led by Godfather of AI, Jensen Nvidia.
How big of a catalyst, Dan, is the fact that the United States is lifting some of these sanctions between the U.S. and Saudi Arabia when it comes to chip purchases? We're seeing the shares of Nvidia up over 5%.
It shows it's not just about China. I mean, think about it. That was not on the table when you look at that whole market. It's not coincidental that they're in Saudi Arabia this week after, obviously, the U.S.-China, weekend talks with Besant, because it shows, when you think about AI revolution, you only have 4% of U.S. enterprises going through AI, 0% in Europe, 0% in Asia outside China, and in Middle East, it's baby steps in terms of where we are today. So this just shows what I believe is going to be happening over the coming years. The trillions being spent on AI, and obviously it starts with chips, but think about on the software side, from Microsoft to Google to Amazon to obviously names like Palantir, which I kind of view as front and center the best pure play AI name out there.
Dan, let's talk about Microsoft since you mentioned it. A report from CNBC citing a spokesperson with the company that Microsoft is cutting 3% of its workforce. Any take on that?
I mean, I think they're just doing what they do every kind of few years. They're still hiring when it comes to direct sales. I think some of the strategic areas. But look, companies, and we've seen with a lot of big tech companies, they're going to have to continue to focus on strategic versus non-strategic. But right now, it's Microsoft's world, everyone else paying rent when it comes to what we're seeing on core cloud in terms of enterprises. So this is in no way any sort of sign of weakening. I mean, they just had a quarter. That was just a Saquon quarter they posted.
And I also, before we let you go, Dan, want to get your take on Tesla. We saw the share slumping a bit off the back of a fall in Chinese sales, but of course, back up today, perhaps off the back of images of Elon Musk and President Trump together in Riyadh, and also the broader market lifting. What's your take on Tesla?
But also remember, like, Musk is in Riyadh as CEO of Tesla, no longer in terms of my view with Doge, Trump administration. Remember, that dark chapter is over. Now it's about autonomous when it comes to Austin in June. I believe it's the next stage of this massive story for Tesla. And I think, look, they're going into a Jalen Brunson moment. I think it's just the start of what I see as just massive growth. And I think a $2 trillion market cap could potentially now be on the table for Tesla.
Really great overview, as always, Dan. It's always a pleasure to have you. Thank you so
you.
much for making the time, and thanks to Lou for joining the conversation.
After a busy big tech earnings week, Wall Street is reassessing its sentiment on tech titans such as Apple. Shares of the iPhone maker sliding as it warns of a $900 million tariff headwind this quarter. Our next guest, though, says this is still a top tech pick for 2025. It is Dan Ives, Wedbush Managing Director and Senior Equity Analyst. And Dan, it's great to see you. And there's a lot to dig through in terms of big tech earnings. But let's start with Apple here. I believe you raised your price target. We see the stock pulling back a little bit today. And just like everything else, a lot of uncertainty here, an environment where Tim Cook doesn't feel comfortable really projecting very far out what is going to end up happening.
Yeah, and Julie, me and you have talked about it a lot. Like, I actually think Apple should be up today. Because when you look at the India pivot, I think this is Hall of Fame. I think the history of Apple, this could be one of Cook's biggest accomplishments, given what we're seeing in terms of the tariff tornado. And in terms of the $900 million, if you told me April 2nd, $900 million would be the incremental cost, that would be like a gift. I mean, my thought was potentially $2 billion. So I get it, just in terms of the reaction, but to me, like a week from now, I think the stock's higher than it was before they printed last night.
How much of this, Dan, do you think comes down to the uncertainty of Apple executives on that call saying, listen, we can't tell you what that tariff impact is going to be past the June quarter?
And look, Josh, you know Apple as well as anyone, right, over the decades. Like, there's just no way Cook is going to give anything outside June because, first off, they don't know the rules of the game. It all comes down to China negotiations. They're pivoting as quickly as they can to India. But I continue to think, like, they're pivoting to India, and India is probably going to be one of the first trade deals done. And I think it would be, very, very surprising, and I think probably, not the smartest thing, if they gave any guidance past June. Because I think that the fact that they gave guidance at all, I think, is a huge positive.
Dan, what do you think iPhone growth looks like, let's call it, over the next 4 quarters? Because there are some analysts, Dan, who think it's going to remain relatively muted until that personalized AI, that updated Siri, comes to iPhone.
I disagree on that, just because my view is, like, look at the China number. I mean, you go back to last quarter, down 11%. Constant currency was flat. Like, the irony is, like, China is actually, you're now getting to a point that you used to have a year-over-year increase in China. So I think when you look at steady state growth, it's going to be, call it, mid to high single digits as we go into, let's say, the next 3-4 quarters, but eventually double digits. Now, clearly, AI is going to play a huge role there, but it goes back to, like, services, despite whatever, a slight miss. I mean, that is Rock of Gibraltar like. Look at the free cash flow. And I think you put it together. I mean, there's a stock that's closer to 300 than 200 over the next year.
Dan, we've been talking about margins and tariffs. What about demand, right? Because we know that consumer sentiment is certainly not great right now in the U.S. So what do you think U.S. sales are going to continue to look like?
Yeah, and look, and that's part of from a tariff perspective. I mean, Apple gets it on both sides from the supply chain perspective, but then of course consumer confidence goes down. $1,000 iPhones, obviously those are going to be tougher and tougher, in terms of the price points. Look, I think it comes down to like when you look at the install base and you look at how many have an upgrade in, call it 4 years, you're still close to what, 275, 300 million? So even if you take more negative view you're going to be looking at 235, 240 million iPhones sold and I think get 250 million as we go into next year. When I put that together, I mean, relative to the numbers that we're seeing today, I think now like Street's cut numbers and it's set up outside of tariffs for actually this probably starts to be a bottoming process in terms of growth.
Dan, broadening it out, which is the big tech earnings report this season that impressed you the most? Was it Apple or another name?
Microsoft. I mean, that was a shocker.
How come?
That was a a Saquon-like quarter, right? I mean, the point is when you look at what you saw in Azure, 200-bit beat, accelerated over the coming quarters, the abandoned data center story, the Pinocchio story, that's done. So the point is like that was for Nadella. That was, I think, just a pivotal moment to show what's happening at Microsoft, what demand looks like. Look at that guide. I mean, I think this is a stock that's actually going to get stronger and stronger. And look, in software, that continues to be a safety blanket trade in this storm.
Switching gears, we want to get through a lot with you because we know you cover a lot. So I want to ask you about Tesla because you know, of course, we're saying that Musk needed to recommit to Tesla. He seemingly did so, right? Although still 1 to 2 days a week in DC is not nothing. Then comes the report that the board had been exploring, searching for a replacement for him potentially. The board said, no, that's not the case. What do you make of all of this sort of back and forth? It feels a little messy, Dan.
Yeah, of course it's messy. I mean, and again, is smoke, how much is fire? Look, Musk is spending 1-2 days in DC with Doge, the same chances that I'm playing for the Knicks in the playoffs. Like, I mean, his days at Doge are essentially done in the Trump White House. So that's my view. And it comes down to like, however the board did it, shareholders, part of why we were so adamant and so loud is because the brand damage hit the point where the clock struck midnight. He had to choose. He did a phenomenal job on the call, and I think that was probably one of the best conference calls that he's done, choosing Tesla. He continues to be the biggest asset for Tesla as CEO, autonomous, optimist future. But when you get into like board, what happened, the reality is like, look, there was massive pressure. And I think Musk felt it. And I also think, look, Doge took on a life of its own. I don't think he ever expected the consequences from a brand perspective and what this was going to become around the globe.
Do you think that there's been a lot of criticism of the board, that they had not done their due diligence in the past, that they had not sort of overseen him enough, that they were all too close to him? Does this kind of report show that they're at least making an attempt at
it
trying
shows
to
like not asleep at the wheel, or exactly like Julie, you're exactly right. Like, I think that's always been the knock on the board, like rubber stamp board, like Musk basically rules it. It doesn't matter. Now, regardless of like what's true, what's not. Look, I think the reality is like the board had their back against the wall. They had to make, I think, decisions, and there was pressure. And I think Musk felt the pressure too. And that's why that was a much different Musk on that conference call than I've probably ever heard in terms of the beginning. And I think he read the room, and the future of Tesla should not be taken down because of Doge. And I think that's the reality. And I think he chose the right path.
Dan, another name you know very well, scheduled to report on Monday. That would be Palantir. Still a buy, Dan?
Messy of AI, right? I mean, look, Josh, this is one like, I think it's going to be $1 trillion market cap in the next 3 to 4 years. I mean, they could just continue. The haters hate on this one. They continue to doubt it. Talk to any CIO, any product manager out there, and ask about Palantir. I mean, their solution set and algorithm is unmatched. And when it comes to all the Brahmas movement, the AI revolution, CapEx, that is all going into their sweet spot. And that's why they're the Messi of AI.
Dan, always great to see you, buddy. Have a terrific weekend.
Great to see you.
Tesla has finally received the long-awaited full self-driving approval in China. This coming following Musk's surprise visit to Beijing this weekend. And joining us now for more on what this means for the EV maker, let's welcome in Wedbush Managing Director and Senior Equity Analyst Dan Ives. Dan, it is always great to have you on the show. So I'm looking at this stock, Dan. It is just roaring higher on this headline. Let's start there, Dan. Does that reaction make sense to you?
I think it makes complete sense. Because look, Josh, this is a watershed moment. For Musk to get FSD in China, it's a game changer. This is something years in the making. No investor thought this was going to happen for the next year. He gets back on that plane from Beijing, drinking mimosas. This was a trophy case win.
Dan, why though? Because all of the other electric vehicle makers that are already competing with Tesla in China, they already have autonomous driving capabilities that have already existed. There's been, of course, price wars going on in China and stiff competition from those other electric vehicle makers. If I'm a Chinese consumer and I'm thinking about buying a car, is FSD really the thing that's going to be pushing me over the edge to buy a Tesla versus a BYD or another car?
Yeah, it's a great question, Julie. I'd say there's two reasons why this is so important. One, FSD, the autonomous vision, number one, in our opinion, being Tesla over the coming years, they needed China. In terms of just from a data perspective, when you think from an AI angle what they're doing, they needed China.
But we don't know if they can use,
but
sorry to interrupt, Dan, we don't know if they can actually, how they can use that data, right?
Well, yet. But ultimately, if you look what Musk's been able to do, remember years ago they said he'd never be able to build a factory in China. Now look at Giga. The point is they need Tesla as much as Tesla needs China because it's the trophy case. You look at Apple, you look at Tesla, two of the best brands in the world. That's why they allowed this with Baidu as a partner. And the reason it's so important is that Tesla almost had one hand behind its back not having FSD in China. Now they have that. And I believe what's starting to get factored in here is a demand. I'm not saying the next week or two, a demand recovery in China. But betting against Musk, it's like betting against Brunson in the playoffs.
And Dan, ultimately, it seems like, if you're a Tesla bull, are you excited because you ultimately think, listen, this potentially, the impact this has on subscription fees, on maybe even licensing this software to OEMs? Is it a margin story, Dan?
Yeah, John, I think two things. One, when you look at Tesla China, it expands the TAM. What they're going to be able to do there from autonomous, not just about the next 6-12 months, especially with Baidu. Where does this go over the next 3-5 years? I mean, when you think about robo-taxis and the autonomous vision. Two, this shows you're really starting to see Musk and China, that relationship get tighter and tighter. And that's a great thing for the stock. That's important because, as we all know, that's been the biggest overhang here. And that's why right now, the bears on Tesla, which so far have won this year, they're going back into those hibernation, into the caves.
Dan, it's my understanding, and maybe, I don't even know if you know this, but maybe if you do, we talked a few years ago to one of the other Chinese automakers who had some autonomous driving capability. And it's my understanding that the regulations are a bit different there, that you have to sort of take a course, right, before you can get an autonomous vehicle or partially autonomous vehicle. Do you know about that? And is Tesla going to be subject to that as well?
Yeah, look, I think these are things that all need to come out in terms of the next steps. But I think the important thing is this is a broader global vision. And I think for China, this is almost a shot across the bow at the U.S. in terms of on FSD. You could see them on the fast track versus what's happening here. And Tesla, that's the golden goose. They're going after China. They needed FSD. It's a key part of the long-term story. And when you see the stock up, I believe it's just the start of the longer-term vision now taking hold.
Big tech stocks under pressure, a bit mixed this morning after getting a big boost from the Trump administration's temporary tariff reprieve for tech products. That sent Apple back above a $3 trillion market cap on Monday. Joining us now with more, Dan Ives, Wedbush Securities Global Head of Technology Research. Dan, great to have you back with us. The last time we spoke, you said these tariffs were causing an economic Armageddon that would set U.S. tech back many years, and now we've got Apple hitting above $3 trillion. Where do you sit with your outlook on tech today, given these negotiations?
Yeah, now is a dark day. I mean, like when me and you and Julie were talking, and I think we're in a better situation today than we were then, because these tariffs, it gives a 1 to 2 month, pause or exemption, whatever you want to call it. And that's also room for negotiation with China. So I think investors are viewing this as kind of breathing room. You're still not going to see any sort of guidance in terms of, earnings and earnings season. But I think this is definitely a step off the cliff relative to where we were the last week.
Dan, I caught a lot of flack from a lot of my followers on that dark day because, look, I was overseas. I was living my best life, or at least trying to, while this was all unfolding, and I'm paying attention to it at night, and I listened into you guys' interview. And even as you're thinking through your coverage universe right now, how many of those names within your universe are still in this twilight zone? Because that's how you titled your most recent note around Apple as well.
I mean, look, if you assume that these ultimately stay in effect, then you never would be bullish on another tech stock, for the rest of the year. I mean, so our view is that it's going to get negotiated to something much more containable. And that's something that tech companies, auto companies, from Tesla to GM to basically every tech company in the supply chain is dealing with. But the reality is that the industry spoke, the 10-year spoke, the dollar spoke, and they need to come back. They need to come back to some sort of area that they're going to be able to negotiate in terms of the White House. And I think that's how the market's reading this.
And it sounds like you're reading it like these negotiations will take place for tech. To what degree do you think that there's a Trump put in U.S. tech stocks?
I do think there is. I think ultimately, if you go back to the last 2 weeks, and I told you, look, 25 years doing this, dot-com bubble, financial crisis, COVID, and everything in between, it's the craziest 2 weeks that I've seen in my career. And scariest relative to what it could have done to the U.S. tech sector and still what we're dealing with. But I do believe, the market spoke, an industry leader spoke, and there's no alternative. And now I'm not saying, do you still need some onshoring, reciprocal tariffs at some minimal level? Yeah. But in its current form, it couldn't stay at this pace. And I think that's just the reality of the situation, instead of just behind a microphone in the Beltway. That this is the reality of what the industry is seeing.
Dan, while we have you, we were just speaking with Pras a moment ago just about one of the other names that you cover in Tesla, and how essentially that is going to need to swerve any type of the activity or policy that's coming forth around automakers as well. From your best estimation, does that alleviate enough pressure on Tesla, or is Tesla in a world of its own, especially considering Elon Musk's annexation to the White House?
Yeah, look, when it comes to the tariff issue, they're actually best positioned relative to Detroit Big Three and others, and obviously foreign automakers still impacted, right? And Musk has talked about that in terms of just auto parts, right? And I continue to think the tariff will ultimately, and Pras hit it, I believe will ultimately be finished cars versus auto parts. That'll be a significant difference. I think that's how it ultimately ends up being. But when it comes to Tesla, I think the worry is, what does retaliatory look like in China in terms of buy domestic, right? I think that's something that's at play. And they have a pivotal 6 months ahead in terms of, what everything we see in Austin, autonomous, and the build out, but the brand issues that Musk, self-inflicted, is dealing with in terms of demand destruction in Europe and the US. And that's why this is a key few quarters ahead for Tesla and also for Musk to make, in my opinion, the right decisions to take a step back from administration.
And talk to me about Apple, another name that you covered, Dan. Where do you see Apple heading from here? And also want to get a check-in on how you're thinking about iPhone prices amid these carve-outs.
Yeah, so look, they're not going to give guidance, when they report earnings. But I think the view is 10% numbers cuts kind of baked in here. I think that's what I would assume. Let's call it maybe 10%, relative to demand destruction, uncertainty, Now, look, if those separate tariffs go in combined with the baseline, and there were no negotiations, you'd be looking at a $2,000 iPhone, and that's massive demand destruction. And that is the key right here: is that you have to assume as an investor, negotiations get down to some sort of manageable tariff rate over the next, call it 2, 3, 4 months. That's how investors are viewing it relative to Apple, but it's also why we didn't downgrade Apple, we didn't downgrade any tech stock. It's our view, like, this is ultimately something that's going to take place over the next 2, 3, 4 months.
If we're charting this over the past 3 months, as we're looking at this kind of longer term chart that was on the screen a moment ago, Dan, I mean, this is still just a lower high for Apple as they're touching the top end of what that range looks like to the downside. As you're thinking about the technical analysis versus where investors would be apt to buy in and looking at some of the dip buying opportunities that are in the market, where does Apple sit within that?
Yeah, look, and the business model is turned upside down, right? I mean, we're not just talking about things like iPhone demand, AI being pushed. I truly believe, like, this has now been, what I view is, call it a 10 to 20% overhang in the stock. But you need to see how it plays out for Apple. I believe best case, you start to get back, 250, 260, 270. Worst case, you could go down another 10, 15, 20%, right? I mean, I think as you start to get toward 180, that's where a lot of investors look like it's like table pounder time. But the reality is that you need to understand the rules of the game, what the tariff issues are going to be and what you're dealing with and what numbers ultimately look like, especially with 2026.
All right, Dan, we got to leave it there. Always appreciate your insights. Thank you so much.
No relief for big tech stocks today. They are plunging again after seeing their worst day since the pandemic yesterday, dragged down by President Trump's new tariff policies that sparked a widespread sell-off. Apple leading the declines among the Magnificent Seven stocks yesterday, seeing its biggest one-day drop since 2020. Joining us now in our studio, Dan Ives, Wedbush Securities Global Head of Technology Research. Dan, you tend to be a very positive guy on most of your coverage. And your notes in the past few days have been as pessimistic as I have ever seen them about what this is going to mean for technology companies. I mean, what kind of hit is this going to cause? And are you assuming that the tariffs are going to stay in place?
Yeah, and I'd say, look, in 25 years going through, when you think about dot-com bubble, burst, financial crisis, COVID lows. So, I've seen every type of crisis there is. I think it's the most absurd thing that I've seen in terms of those 25 years. And I think it's an economic Armageddon that's coming our way. And I think it could ultimately set U.S. tech back many years. And that's the thing that a lot of people don't understand. Talking to executives around the world the last 48, 72 hours is that I don't think a lot of tech companies are going to give guidance in terms of 1Q. And I think baked in here is already called 5, 10% cuts off the bat in terms of growth. If this stays, it ultimately, look, this becomes a black swan event. You're playing with third rail issue here.
Is that priced into these stocks if we see this kind of magnitude of decline hold today?
No, because obviously with China, they're not going to lay down. So
right, they've said this morning 34% tariffs right back on U.S. goods.
And then I think it also comes down to the tariff chart, which continues to be a sci-fi, sort of comedy show. Those are not the right tariffs. So it starts with what's the number you actually even start with in terms of negotiations? And the longer this stays on, you can't stop a snowball once it starts. So the point is, do you burn the house down, but you still have a bagel in the toaster oven at the end of the day? And I think that's the frustrating thing right now for tech investors. Stocks are not Republican or Democrat. They speak volumes to what they're showing you, and I think that's the problem.
To the point of China retaliating with additional tariffs this morning, how does all of this play into the fact that the U.S. has been the dominant place for tech investors for so long? Does China start to outcompete the U.S. on tech?
It's a great, but just even go back to, for years, the reason China was such a bad market, you didn't know what the party was going to do over a weekend. So you couldn't invest in China.
Right.
to some extent, that's kind of what's happened here. So that's why I've seen so much global money going to Europe, going to China, going away, because you don't know what's going to happen. I think it just comes down to what's the reality. Like, is Back to the Future on TV? Is Hasselhoff on? Like, we're not going back to 85 textiles in the U.S., despite whatever they say in the Beltway. The reality is that the U.S. tech infrastructure is built with supply chain in Asia. If you like $3,500 iPhones, we should build them in New Jersey. If you like $1,000 iPhones, you build them in China. And I think that fundamentally, and also it takes 4 to 5 years to build a factory.
And can we talk about that? Because I'm getting a lot of questions about your note on that, and people are interested in how you got to that $3,500. So for context, Dan had a note saying that the iPhone could be as expensive as $3,500 because of tariffs. Right now, it's around $1,000.
If they were built in the U.S.
Correct.
Now, off the bat, just on the tariffs, it's over $2,000. In terms of, you just look at the actual China tariffs.
If I go to buy an iPhone after April 9th, how much is that? That iPhone's going to be $2,000. You think that Apple is going to raise prices immediately on iPhones?
I believe after Memorial Day, it's over $2,000. Because they can't, Julie, they can't absorb. We're not talking like 3 to 5% through the supply chain. They can't absorb a 50% hit. And then it depends on whatever. We got to see what exemptions they get or whatever. That's why this is, look, it's a black swan event. Going back to 3,500, look, the reality is, so many people that watch us from afar, they've never been to a fab in Taiwan, China. They don't understand. We don't even have you have labor where people, whether Starbucks, Chipotle, $22, $24 an hour. The reality is it would take them $20 to $30 billion in 3 years to move just 10% of the supply chain to the US. So you could talk in front of the microphones in the Beltway and it could sound awesome. You could paint this fairy tale Pinocchio picture. Yeah. That's the reality, and that's what stocks don't lie, and they know it.
So when do you, because you're still overweight all of these names, when do you change your rating? Is it Memorial Day when you say the iPhone's going to be $2,000? What is it that causes that real fundamental hit?
Well, by then it's too late. Because I already think, like, just the fact that this happened, I'm already seeing the uncertainty across tech. It's not just consumers, enterprises, hey, let's slow down CapEx. What does this mean? That's already factored in 5-10% cuts. If this actually goes into effect and lasts, let's say, a month, it's in my opinion, it's guaranteed recession. And you now start to be like, okay, now it's a game of chicken. Like, ultimately, when do the tariffs, do those get negotiated? What do they look like? But as it's happening, guess who gets hurt? It's the U.S. consumer. And that's why I just continue to stress is that all the companies and all the investors I talk to around the world, the reason I'm so negative is that this is a self-inflicted, worst policy decision in 100 years, and I don't even think it's a debate relative to everything I've seen.
So to Maddie's point, April 10th, do we see a wave of downgrades from Dan Ives if this is still in place?
Look, I think we got to evaluate what numbers look like, because I can tell you right now, like Nvidia, you're already baking in numbers come down 10-15% at current price. So if you start to see some negotiations and you're able to basically be like, okay, toss out March quarter, okay? Because that's basically in the past, 2Q is going to be a disaster. Street will be able to look through 3Q, 4Q, okay, what's normalized 26. But to sit here and say, no, Tara, this is no big deal, I think they're not going to leave. You'd have to be from an alien nation to actually think that.
So for Nvidia specifically, obviously the big deal, I mean, it's already sort of navigated around China to some extent. It's really the Taiwan tariffs, I would imagine, that are the biggest deal for the likes of Nvidia. So what if the tariff stays in place on Taiwan? Like, what are we talking about?
And you guys see the semi piece in terms of like what they're actually, tariffed at. And
if there's the sectoral
the sectoral tariffs. Right. And then the reality is that it's about growth. See, that is the biggest thing here. It's not even just the cost and the impact there, it's growth. It's company X being like, hey, I was gonna spend on these projects, let me slow down till we see what's happening in our business. And that's the problem, self-fulfilling prophecy as this comes out. And I just think it continues to be the most befuddling, absurd thing that I've seen, self-inflicted economic Armageddon, and I don't think there's a debate.
These tech CEOs who were proudly there on Inauguration Day, now the Mag 7 losing $1 trillion in one day, In your conversations with them, do you think that they regret that support?
Look, I think in Silicon Valley, they are dystopian. I mean, it was like they're waking up being like, it feels like an altered universe in terms of the way that Trump has navigated this handle. Reciprocal tariffs, you knew was on the table, 10, 15%, play games, poker, fine. But to actually try to build this chart from like the Goodwill Hunting chalkboard at MIT lab and say it's some fancy chart, it's basically, it's essentially a trade deficit converted into some weird tariff chart. It's not real tariffs. So that's part of the problem, is that that's like me saying like I play in the NBA and my name's Jim. So how do you even know? Where do you even start with the conversation?
So as an investor right now, when you're looking at all of these large cap tech stocks that are falling, what are you telling people to do? Just do nothing? Sit on if you have them, just hold on to them and wait.
What we're doing is we're basically going through worst case scenarios. Where can Nvidia earnings be? Worst case. What is Apple? Microsoft. So you have to do scenario analysis and then basically say, okay, based on this, is it base case, best case, worst case? Do scenarios. And look, we're taking out the COVID 2020 playbook. So you're basically looking through like, forget 2Q, probably forget 3Q. What do normalized earnings look like when you go out to 26, assuming that this normalizes? But then the problem is that you can't put the genie back in the bottle. Does it create something that's much more sinister in terms of a black swan? I think that's the worry. Yeah. And then also it just comes down to like the confidence in the Beltway. It's something that unlike anything I've seen, I've navigated everything from .com bubble to today. Right. So that's why I don't just sit here. So many of those other moments were times that just you buy them, you don't work. This is one, you cannot say that given you don't know the rules of the game.
So really quickly here, how long for these stocks to recover and how long until we start hearing about layoffs at these tech companies?
I think you don't have layoffs for another few months because no one, until you have a good sense of what the actual policy is in negotiations. So I don't think any companies go down that route. But when it comes to like how low can they go, it comes down to like, till you bake in a full-on deep recession into these numbers, then the stocks could continue to fall.
One more question, going back to the iPhone. If you're thinking you might want a new iPhone, but you've been going back and forth, you better go get it right now. I mean, are we going to see this sort of bump in Apple sales ahead of the tariff imposition?
Yeah, but that bump is it's meaningless relative to the dark storm that's coming. And then it comes down to like the average car is going to go up $5,000 to $10,000. So when the reality of that, UAW workers, they could be happy at that moment, but then all of a sudden when you have to lay off 15, 20%, your GM4, it's not such a happy day there. Yeah. So I think that's the reality, is that many are underestimating the unintended consequences of what's happening in the worst policy mistake in the last 100 years.
You know what you just reminded me of? How do we get through a conversation with you without talking about Tesla? Yeah. Is this like unprecedented?
Look, and the reality is when you look at Tesla, like Musk, I mean, it's moment of truth, because bottom line is the longer he stays in Doge, every day the brand crisis for Tesla expands and gets worse and worse. And that's why Tesla's become a political symbol, a debacle for Tesla shareholders with such great future. But it comes back to like, this is a fork in the road for Musk when it comes to Tesla. He either leaves Doge, takes a huge step back, or this will be, I think, some pretty dark times.
Elon Musk holding that all-hands meeting on X last night. Musk hoping to reassure investors after what's been a tumultuous start to the year for Tesla.
So it's very difficult for people in the stock market, especially those that look in the rearview mirror, which is most people, to imagine a future where suddenly a 10 million vehicle fleet has 5 to 10 times the usefulness. So what I'm saying is hang on to your stock.
All right, for more now, we're bringing in Dan Ives, Managing Director and Global Head of Technology Research at Wedbush Securities. Dan, it is always good to see you. So Musk does have this all-hands meeting. You tell your clients, Dan, in this new note, you say this was Musk taking a big step forward with this meeting. How come, Dan? Why do you think of this as a big step forward?
Yeah, and John, I mean, we talked about yesterday obviously in the morning, it was time for him to step up. In other words, you got leaders lead. And during this period, he needs to lead as CEO of Tesla. And I think that's been part of the frustration. But I thought last night was a huge step forward in terms of this quickly put together all hands meeting, because it's showing employees, shareholders, what's the vision, medium and long term. That continues to really be the golden goose. And I think it was an important first step into ultimately more of a balancing act for Musk.
I don't know, Dan. And then he got right back on a plane and went back to D.C. I don't know why him talking in front of his employees is such an important step. And I mean, is it going to keep people from not buying Teslas?
Yeah, I mean, Julie, my view is it's a first step. In other words, the whole goal here is, I'm not saying, and the many shareholders, for him to end Doge. It's about a balancing act.
So what else?
About,
so what now? What if that's the first step? What are the other steps? What now needs to happen?
Is that he needs to be more engaged with Tesla. He ultimately even when it comes to Doge, whether it's very similar to how Linda stepped in terms of at X, it's making sure that he is not front and center 5 times an hour when it comes to Doge. I think that you talk about the political firestorm and everything else, the lightning rod. I think part of navigating that, it's that balancing act. He's going to get criticism, okay, and we understand that. That doesn't necessarily change the brand itself. If he starts to take a step back, that's where I think there's brand damage. It's a scar, it's a bad bruise, but it's not a permanent black eye.
Dan Ives, Corey Johnson here.
Hey, Corey.
Last quarter, 33% of free cash flow was from government subsidies, zero emission credits for most of it. 4 quarters ago, it was 100% of free cash flow. Do you start to look forward to a federal government that's cutting unnecessary spending, that has given hundreds of millions of dollars to Tesla, not doing that anymore? Does that change your models in the future?
Look, I mean, they've become much less reliant, right, when it comes to the credits. But look, I mean, you obviously raise a great point, which has been there, is that, and it's our view that Tesla, 90% of the value going forward is autonomous and robotics, which has nothing to do with EV tax credits. And I think, Musk talked about that in the all hands meeting. That's the future. And my view with Tesla continues to be, 6 times? We've seen the stock sell off 50% peak to trough. I mean, the point is we've been through many, very tough white knuckle times before. This is obviously one that's even broader in terms of the political landscape. Doesn't change my view. This and Nvidia, the 2 best disruptive technology plays next decade.
Dan, let me ask you a different question, which some of your colleagues on the street, it's interesting. They'll say that all this talk of the branding and the politics and the chainsaw and the Mar-a-Lago, that is not really the issue. I've heard some of your colleagues say the issue is much more fundamental. It is a Model Y switchover. It's a Model Y changeover. That is what's meaningfully impacting deliveries. There's too much, they say, being placed on the whole branding debate. What is your take on that?
Yeah, look, I think there's some truth to both. Look, in terms of the actual numbers, in terms of the sales numbers, yeah, I mean, the brand issues have actually been, called 10 to 15% of the actual decline, because a lot of that is changeover, refresh, and everything else. But Josh, I think in terms of the stock, 70% of the sell-off is brand issue, brand worries in terms of, some of the sort of crisis that we're seeing. And the reason is, it's investors kind of looking forward. In other words, Musk is Tesla, Tesla is Musk. He is the brand. And what he's created is a company that's obviously, globally, in my opinion, one of the best brands in the world. It's making sure that the brand damage doesn't spiral into something much more negative. And I think that's how I'd almost characterize those 2 issues.
I have to wonder if it's already there, Dan. And I also, I've been trying to think of other brand situations like this, right? You think about the Budweiser situation, you think about Target, you think about some of the other recent examples, and it has taken a long time in those cases, and they haven't. In some cases, they haven't even fully recovered, right? So, how long? Especially since he doesn't actually seem to be trying to do anything to repair this damage in terms of the brand and the image. I mean, how long could we see the situation play out?
Look, Joey, there's different ways to view it. I mean, some could argue, and we got to see how it plays out. Like, do more Republican or Trump supporters ultimately then start to buy Teslas, right? In other words, ones that weren't buying it, now they're Musk supporters, and that actually becomes a positive. Then it comes down to, when you look at the brand, I mean, I think Tesla's brand it's almost hard to compare, because you're going to have 10 million Teslas essentially on the road going into next year. And when it comes to autonomous, the question is, like, when you start to actually have cyber cabs, and we have what I believe 1 of every 5 cars autonomous, do people not take that because it's Musk? Because maybe something that happened a few years ago? I'm fast forwarding to the next, 1, 2, 3 years. So I'm just saying, I get the brand issues. We've talked about it, constantly over the last week. But the reason last night was important, because you read the room. It's the start of what I view as a balancing act, and I think that's very important.
Well, we'll see if he starts to take those next steps then, Dan. Thanks so much. Appreciate it.
Thanks.
Well, Palantir reporting a convincing beat on fourth quarter earnings. Our next guest says the tech giant is playing chess in the AI arms race while others are playing checkers. Joining us now, Dan Ives, Managing Director and Global Head of Technology Research at Wedbush Securities. I don't know which analogy to pick. They're the Messi of AI. They're playing. I'm picturing like Messi playing chess.
I like that.
Against maybe some other entire team playing checkers. I don't know. Yeah.
No, I like that. I think that's a great one.
You have my permission to put that in your next.
I will. I mean, I could cite you.
So why do you think Palantir, in your view, I mean, you have said consistently that they are way ahead. Mm-hmm. What do you think is the sort of special sauce?
Look, I think Karp and the team at Palantir, they have built a unique product that I think is unmatched. When it comes,
what makes it so unique?
When it comes to any customer, literally the 50 or 60 customers that we've talked to, no one matches Palantir. They could come in here and basically do a data dump for a day and come out and be like, these are the 3 to 4 use cases that you should do here. And there's no other company out there that offers that. And that's why Microsoft's partnering with them, Oracle's partnering with them. But if you look at that earnings last night, I would only, outside of Nvidia, there's really been none that's been such a jaw dropper relative to what they posted from a revenue, commercial growth, as well as guidance. That's why we always say, like, the bears, they hated at 12, despised it at 50, and 100, they're screaming, from the top of the buildings, because remember, the bears, they can see AI in the spreadsheets.
Let me ask you this, Dan. The bears, here's one. RBC's Rishi Jaluria, smart guy. I've known Rishi a long time. Not a fan of Palantir. So here, what does a bear say? Okay, here's what he told his clients. He said, our concerns about the runway for growth and product differentiation remain. And he goes on to say, we continue to see the risk reward skewing unfavorable with shares trading at a premium multiple. You say what to Rishi?
I say that would be the equivalent of an NFL scout being at the 2000 Combine, seeing Tom Brady and be like, this guy, undraftable. So it was 6th round, Michigan. And then 5 years later, after a few Super Bowls, this is overdone. And then a few more Super Bowls. And now so my view is, look, haters are going to hate. The reality is when you do the due diligence and you understand what they're doing, I believe this could be the next Oracle or Salesforce. I mean, that's my view relative to where Palantir is going to be over the next 3, 4, 5 years. And I think it's so institutionally hated. I think in a lot of ways similar to Tesla. But yet I think Karp on that Mount Rushmore.
So let me ask you, if it's not valuation, your clients at Wedbush, they said, okay, Dan, but what's the risk? What's the risk here I need to think about on my radar? You tell them what?
The risk I always tell them is like, look, execution, okay, they have so much demand. Quarter to quarter, they got to continue to execute, and some of those deals could push left or right, but ultimately their pipeline, their opportunity, and the street's basically underestimating it over the long term, over the next 2, 3, 4 years, by 50, 60%. I mean, I think it's that big because I think when you look at it, this is a company that I could see doing 8, 10 billion a year annually. But again, that's going to take time, but no different than, as you know well, if you valued every transformational tech name over the last 20 years, just on 1 year numbers, you would have missed from Meta to Amazon to Google to Tesla and everyone else.
I want to widen this out a little bit because I want to zero in on something that Venu Krishna of Barclays just told us a few moments ago. We were talking about the CapEx cycle of all of these companies that are throwing so much money at AI data center infrastructure build out, right? We're going to hear from Alphabet in a little bit. They're probably going to repeat that. He said, you've got $100 billion that's been spent, and they're collecting up to this point something like $5 billion in profit or in revenue from this stuff. And he said, everybody's waiting for the sort of killer apps to come out. Where are we in that, Dan Ives? I mean, you pay attention all day long to this stuff. Where are we in that? When are we going to get to that point? And is there a point at which investor patience is going to run out to get there?
I think Palantir showed it last night. I think you've seen it in Salesforce. ServiceNow has shown it. I think Oracle Components has shown it. And I believe 2025, if we sit here a year from now, we're going to look back. It's the year of software. From an AI perspective, second, third derivatives playing out. And that CapEx, that's $2 trillion of AI CapEx over the next 3 years. Software is going to play a huge role. But the monetization is starting to happen. And I think that is fundamentally at the core. That's why names like Palantir are so important in the broader view. We talk about DeepSeek and everything that's happened, but the reality is Nvidia, obviously Godfather AI, and Jensen, that's really the foundation. But the most important, I'd say most important earnings potentially during earnings season was Palantir, because it shows the use cases are exploding.
Let me ask you, switch gears, I want to get your take on Apple. Specifically, if I'm an Apple investor, I'm listening right now, I want to know what could be the impact of China tariffs on Tim Cook's company. Big deal, no deal, how do you think about it? Assuming they're enforced and Cook doesn't get an exemption.
Well, and we do believe he ultimately does get an exemption. I mean, our view is he gets an exemption just like 18, and it goes back to Cook, 10% politician, 90% CEO, and it's sort of their ability to sort of navigate these tariffs is always going to be an issue. But also it's at a point where China is so important relative to Apple Intelligence rolling out.
Well, what's the risk to that, to the timeline for Apple Intelligence?
So it's a great question. I believe that whether it's Baidu, Tencent, potentially there's a few others, that gets announced in the next 4 to 6 weeks in terms of the actual partner in China. Then that gets rolled out in April. And our whole view of Apple's product cycle is this is going to be an elongated, massive product cycle, super cycle, however you want to characterize it, but the consumer AI revolution is going to come through Cupertino. 25% of consumers in the world, when they access AI, it's going to come through an Apple device.
Well, okay, so hang on for a second. Getting back to China and that AI partner, do you think that process, though, will be delayed or affected at all by this trade war?
I don't believe it will. I mean, based on everything, and we'll be in Asia for the next few weeks, I think this is one where the partner is going to be key to rolling it out. I think they're very, very heavily along that line to get that out. But look, it's complex. But I think that's also why Apple has been down. It's why Nvidia is. There's just worries about overall China tariffs. But I think bark's going to be worse than bite.
It was interesting. I spoke to Apple CFO Kevin Parekh, and Kevin said he absolutely emphasized to me Apple Intelligence is driving upgrades. For sure. So your bottom line is when you're talking to your client, you're saying, listen, when Chinese regulators greenlight Apple Intelligence, you're confident. Listen, that drives demand over there.
That will be the start of this massive growth cycle, because think about it, that was 11% decline in China. It's really 5% with inventory. Now, ultimately, that starts to be double-digit growth. And I think that's ultimately going to be the key. And that's why, look, this is one where Apple, it's not going to happen overnight. It's not Nvidia. It's not Palantir. But it comes down to install base. That grew 7% from a device perspective, biggest upgrades they had in any quarter. And I think this is one that's going to prove itself out over this year.
Dan, always great to see you. On set, by the way. Dan Ives.
This has made our day.
No.
I mean, it's made my day being on set here.
Always great to have you, Dan. Appreciate it. Thank you, sir.
Welcome to a new episode of Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this is the podcast that will make you a smarter investor and, dare I say, a better leader. Before we get to our featured guest for this exciting episode, which of course is going to be one of our favorite stocks, that's Nvidia. Have to start with our stocks of the day. A little different. Normally I do a stock of the day, going stocks of the day, and that is the quantum computing sector. These stocks are getting absolutely eviscerated in this session today. I'm talking about Rigetti Computing, D-Wave. These have been some of the hottest tickers on Yahoo Finance. I look at Rigetti Computing. Stock's up 1,700% in the past year, ever since that Google Willow chip dropped in early December, has sent this whole space skyrocketing. But why the stocks are getting slammed is because Jensen Huang, the AI godfather, really, I think, set off some concerns about the pace at which quantum computing will drive revenue and profits for a lot of these quantum stocks. Quick note on what Jensen said at CES to the analyst community. Quote, if you kind of said 15 years for very useful quantum computers, that would probably be on the early side. If you said 30, it's probably on the late side. And I think what you've seen with these quantum computing stocks, hard to even say it really fast, is that investors want to see them make money today. Well, newsflash, they're not making money. A lot of these quantum computing stocks are losing massive amounts of money, and I think the street was very surprised by that. That's why you're seeing the sell-off here. But let's stay on all things AI and bring in a friend of the podcast, friend of Opening Bid, that is Wedbush analyst Dan Ives. Dan, you were in that room with Jensen, right, at CES? What was like a rock concert you wrote, right?
Yeah, first row. I mean, that was like a rock concert. Look, I think it speaks to, like, that's the vision. That's where it's all. I mean, just getting back from CES, I mean, it's all about AI, and it's really laying out not necessarily the next 3 to 6 months, but what does the next 5 years, 10 years look like in terms of robotics, autonomous? It doesn't happen without Godfather of AI, Jensen, Nvidia.
Why did the stock sell off?
Look, I mean, we could go back to quarters, right, where the stock sells off. Bears come out, have a hibernation mode, stock goes to 100, then all of a sudden 2 months later back to all-time highs. I mean, my point is, like, I mean, look at Apple. Apple sold to 190 at WWDC, when 250, 260. I just think these knee jerks, it's easy to kind of get scared by them because they don't say anything about near-term demand. The reality is you come out of that more bullish rather than less bullish, because of what that market opportunity means in terms of robotics, autonomous, and the future.
Dan, you're in that room. You know, I see Nvidia through the prism of the data we get on Yahoo Finance. Every single day, Dan, the millions of people that go to this Nvidia ticker page is through the roof. This is the most popular stock in the world, at least from my vantage point. When you're in that room at CES, do you feel that excitement?
Yeah.
What are people in that room? What did you hear from them on Nvidia this year?
The only thing that would compare would maybe be like at iPhone launch, Jobs, 2007.
Wow.
Like,
really?
But I'm trying to give you like an example of like the feel where there's something different, there's something new, and that's why, look, I get it. Like, a lot of the bears that have missed every transformational tech stock the last 20 years, they'll become hyper focused on geopolitical tariffs, 10-year, 5%. Remember, I mean, these are
Oh, they're
bears.
slamming stocks, Dan. I mean, the 10-year and 5% earnings are going to
And
suck.
remember, these are bears. They hate NASDAQ at 3K, despise it at 20K. I mean, it would be like listening to a draft analysis that was super negative on Brady coming out of Michigan 2000 draft 6th round. I'm just trying to explain, like, that's all noise to me. I just focus on what does the future look like? What does AI revolution as it spreads, not just in names like, of course, Palantir, Salesforce, ServiceNow, the rest of the software. I think that's what it's about. I mean, I think what Jensen's laying out is this is early days. It is just the beginning of the revolution.
But what we're seeing, let me go back to the sell-off here. You know, I think it was, investors, they get worried. They trade in and out of the stock. I think a lot of people that have invested in Nvidia only know the stock to go up generally. Did we get a taste of what it might be like for the first half of this year for Nvidia, where they're not going to be able to do enough to meet the really, really high expectations that they set, Dan? I mean, you know this. They set these expectations last year, given how many times they've squashed earnings and they've just continued to deliver on the tech front.
Actually, I don't think necessarily it's Nvidia, because you go look at names like Palantir, Tesla, some of the sell-offs that we're seeing. I think broadly, we're just going to see some white knuckles in the next 6 months. Trump, headline risk, tariffs, 10-year maniacal, as it goes to 5%, what does it mean for Fed? And So I think we're going to see some of that. But look, my view is tech stocks are up 25% this year. I think Nvidia is well over 4 trillion along with Apple. I just think we're going into one of those periods where the bears, they're like, okay, well, we've missed out the last 2 years in our caves. Now we're going to come out. That's central casting. Coming out first week or two, wait for all the downgrades, fire in a crowd theater. But the reality is that you're not stopping 2 trillion of AI capex. See that I just keep coming back to like
You're not even looking at you're not even looking at the short term. I mean, I'm getting notes, Dan. I've got notes flooding my box. Oh, Nvidia, they didn't provide any guidance at CES, but they don't normally provide guidance at CES, right?
But Saz, they hated Nvidia 80% ago. They hate it today. As I always say, like the bears in the 10th floor of the New York City office building, they can't see AI in the spreadsheets. So the point is, like, as I see it globally across Asia, we'll be in Europe next week, which obviously is really behind when it comes to AI. What I'm seeing from IT buyers, not just on the consumer side, but on enterprise, you're going to see a tidal wave of activity in terms of use cases. And the other thing, remember, like Khan, the Nightmare, whatever your favorite horror movie is, Friday the 13th, Nightmare on Elm Street, personal favorite.
Nightmare on Elm Street. I mean, that 80s Nightmare on Elm Street, Dan, that's the jam, dude.
Yeah, I don't think I slept for like weeks in Long Island after watching that. But the point is, Khan's done. It's gone. That's in the history books. That nightmare is done for tech. You know what that means? M&A, get the ready, sort of get the engines ready in terms of what we're going to see M&A around potentially quantum, AI, autonomous chips with Khan done.
I got to give a shout out to our tech editor, Dan Halley, on the ground at CS. Did some really great interviews. Got some time, I believe like 10 minutes with NVIDIA CEO Jensen Huang, really. So we appreciate NVIDIA getting that interview to Dan, and Dan, of course, doing that interview. What struck me, Dan, is that I'm always interested in just watching Jensen, how he interacts, how he thinks. Like, what do you think makes him tick? I mean, you've seen him up close and personal for many years. I was watching Dan's interview. I mean, he's explaining these complicated things, and you kind of get why NVIDIA is NVIDIA just by watching him for 10 minutes.
They're so far ahead of the game. It's actually pretty insane. I mean, man, we'll go back to 2022. You talk about a lot of the analysts that are talking about valuation. Jensen, why are you spending on AI? You should be focused on gaming. How'd that play out? So the point is that Jensen, he plays chess, others play checkers at the kids' table. And I think now expanding further and further, if you look what he's talking about in terms of supercomputer, autonomous, in terms of robotics, that physical AI, that's the next step. And look, Blackwell demand's insane. And I just think this is one where it's very easy to come out of this. Stock sells off a bit after all-time high. People take profits, just worry about 10-year, everything else. Let's see where we are 6-9 months from now. I mean, I just think we're in a once-in-a-40-year revolution that we just happen to be living through. And that's why sometimes, like, investors from a valuation, and I get the old school DCF, but
discounted cash flow.
But look,
for our newer viewers,
you can't put it in terms of the type of growth we're seeing. And there's some investors, after I talk to them, I feel like Three's Company's Silver Spoons or Knight Riders on TV. I feel like I'm back to 87. Or 88. So I think you just have to adjust to a new framework given what we see with this AI revolution.
Are you kidding me, Dan? I watched Knight Rider on reruns over this past weekend. Are you kidding me?
Look,
I mean, that car drove by itself. But actually, that brings
think about it. Kit was the original autonomous, if you actually start to think about it.
Yeah, shout out to David Hasselhoff. I mean, those teams know what they're doing.
And remember, Hasselhoff is a singer, too. You got
to big in, I think, Germany, right? I mean, that guy's a legend.
Huge. Dude, Germany, a legend.
Guy's a legend. But look, let's stay on autonomous, because Jensen dumped a lot of things on the plate of investors to think about. Robotics. Let's just start with autonomous, because I know you cover Tesla, too. How big is that autonomous opportunity? Now, we've talked to some people that would suggest that Tesla's going to start putting out robo-taxis next year, in the middle of next year. You hear Jensen talk about autonomous. Is it really that big? And like, when do we actually start seeing these things?
I think a year from now, we will, in certain cities, we'll actually see in terms of cyber cabs, you'll start to see them on the road early to mid 26. And that, I think that's the reality, is that, and also remember, the biggest thing regulatory wise now in Musk front seat sort of at the Trump White House, regulatory environment is going to massively change. So that's huge, because that's been a huge issue in what I view Tesla's ascent on autonomous as we start to go toward level 4. And it's going to be just the next step on FSD, on cybercabs. We believe it's worth $1 trillion alone. As I've always said, like, Tesla's one where to look at it just as a simple car company, EV, deliveries, it's like calling Apple just a traditional hardware smartphone maker when it's $200 billion.
All right, Dan, hang with us. We're going to go off for a quick break. We'll be right back on Opening Bid. All right, having a great conversation on all things NVIDIA and tech with Wedbush analyst Dan Ives. So we're talking about the autonomous opportunity. For those not familiar, Dan, is NVIDIA in a leadership position there? Who else makes these chips going into these autonomous cars?
Well, they're in a lead position when it comes from a chip perspective. When it comes to the actual, of course, like where Waymo is, but I believe Tesla. So you have to think like a triangulated market. NVIDIA talked about partnering with Toyota, and they'll obviously be a player there, but it's more they're providing the chips. And I just view it as like, when you're bullish on Tesla in terms of autonomous, you're also bullish on NVIDIA. Because they're providing the chips, down the road. And I just think that's the broader view where this is all heading in terms of robotics, autonomous, and the broader technology. They are going to benefit in all facets. Of course, AMD and others at one point will be a competitor. Big tech will build their own chips at one point. But right now, it's NVIDIA's world, everyone else paying rent.
Yeah, Dan, I'm glad you mentioned AMD, not to get too off tangent. I recently wrote a morning brief newsletter on AMD. I'm surprised, Dan. When I wrote it about maybe 2 weeks ago, the stock was down 7% for the past year. AMD is putting out big numbers. They've solidified number 2 pole position in AI chips. Intel's not even in this discussion. What gets AMD's stock working again?
You got to start to bring these chips to market. Look, you're not going to bet against Lisa Su.
No, best in class leader.
And I actually think like the sell-off in AMD, it's very similar to like Google and like the 150s were about antitrust. I actually think it's way overdone. They will be a competitor. You're not baking in any AI success in terms of as they're playing out. And I think now this is a prove-it year as they start to release some of these products into the market. And I think that's going to be the theme this year, is that a lot of other players are going to benefit on chip, on software, when it comes to AI revolution.
All right, so you're in that room in CS, Dan. You're having fun. You're taking your notes and stuff. So when robots appear on stage with Jensen, what's your first thought?
Well, actually, the first thought is I'm looking at him like, look, is he going to wear a crocodile leather jacket at Davos?
Wow.
That was the first. So the first thing that popped up, I'm like, does he wear that sort of crocodile leather jacket? But again, that's
hold on. Hold on. Let's stay on the jacket. Was the jacket a sign that like we've reached peak NVIDIA? Because that's Jensen's not a normal jacket. He wears the black leather jacket, but this had some shine to it, Dan. This was alligator,
brings
right?
out for special occasions,
okay.
And the Hermes sneakers, right? Okay. So you got to include those too. But again, like, when you're worth what Jensen's worth, I think
you could get an alligator leather coat.
You could get a lot of alligator leather coats. But so look, it's to me, it's just when you're in the room, I think it's also trying to understand, like, okay, it's a little snapshot of the future. And look, I felt the same way about robotaxi today, right? But just go back to that initial robot street. Remember, a lot of times, like, vest, no sleeves, spreadsheet with the laptop, come out Robotaxi Day negative. Look where we
Patagonia,
are.
the Patagonia vests. I mean, let's just be real.
Oh, the
I mean, it's the look.
Patagonia, Peter Millar, whatever.
Yeah.
Look where we are today. No, but just think about the reaction in October. Let's go back to WWDC in June. I think stock traded maybe like 190. Oh, the AI, this is not. Look at the stock today. And despite like a lot of the long-term bears coming out trying to scare more, the consumer AI revolution runs through Apple. But it goes back to, like, do you see it this quarter? No. Will you? But it just goes back to like my sort of view, how you have to think about these names, and you guys stick to the game plan, and you don't get scared by some of these sort of white knuckle, where there's 10-year geopolitical China tariffs, knee-jerk reactions.
Let me put this one to you, Dan, because I now see Nvidia and Tesla as very similar companies. I know what they do is different, but there really are AI plays. Do investors run the risk of having too much like concentration in the same theme in their portfolio if they own Tesla and Nvidia?
I think you need to think about it like a basket. You want to own chip players, of course, led by Nvidia. You want to own some of the autonomous like Tesla, but also I think there's hedge. If you look like in software names like Salesforce, ServiceNow, Oracle, I view the hyperscale as Microsoft, Google, Amazon. I think you have to view it as like it's a hedge portfolio in terms of ways to play AI. Look, if you want to play like financials, healthcare, of course, others are going to play. I just continue to view like, do you want to be in the minivan going 40 miles an hour, beating down radio, right lane? Or would you pay up for tech in a Ferrari in the left lane? And I think that continues to be the theme as these stocks, they continue to execute.
Are you a big robots guy, Dan? You think this is really going to happen?
You're
going to have a humanoid? You're going to have your own humanoid and you're good
How
with
about
it?
this? I believe next 3 to 4 years, like you are going to see, I'm going to take commonplace, sub 30K, you'll be able to lease them. It's going to become a reality.
Wow. I mean, I can create my own Dan Ives humanoid robot, and you could just be a recurring guest on the show, like every day, like every time.
But look, it's like me and you have talked for years, like the Jetsons is becoming a reality. And I think that's the one thing, like when you leave CES is not about like flying drones, refrigerators that talk to you. We're talking real applicability that's just starting on the consumer enterprise. I can tell you 30-40% of the people that I see at CES this year, it's their first time. So there's a lot of companies that are not officially at CES that are there because they're looking around technology, trying to understand where they're going to be. And I think that's the important thing.
Well, I know, just staying on real quick before I let you go, did you see that Xpeng news? I mean, it was like a van, and then you open I never thought I'd own a van in my life. I mean, I hate vans. I get it. They make sense, though. But you open the back of this Xpeng, and like a flying, I guess, plane or something comes out where you can like fly in a helicopter. I mean, holy cow. Like,
yeah, I was there, and it's what, look, remember, we're talking 2028. Like, it just speaks to my view. This is unprecedented. So again, you could sit there and focus on what these stocks look like over the next year. We're in a transformation. This is not hype. This is as real as anything I've seen. I think it's going to change the world. And that's why I just go back to like the bears that focus on valuation, a macro event and black swan event. Usually, they scare people on the weekends as the bulls are enjoying themselves. They'll do the same thing this time. And I'm not saying we're not going to have ebbs and flows. Tech stocks will be much higher this year. And especially when I look at names like Nvidia, Tesla, Apple, and others.
Dan, you're the perfect guy for our hot take segment. You always are. So I left 2 stocks specifically for you in about, let's say, 3.5 minutes we have. Apple, one of your peers on the street downgraded the stock this week to sell. I think it surprised a lot of folks. But the note to me made sense. It seemed valuation based. Seems like the bad news has been piling up on Apple the past few months. Maybe the street has ignored that, or investors have ignored that. What do you think of a call like that? Are there valuation concerns on Apple?
If you focus purely on valuation, then of course you're going to that's going to be a sort of cookie cutter call. But you can't just focus on value. You have to focus on best consumer install base in the world, 300 million have an upgrade phone in 4+ years. iPhone so far has basically been at plan to maybe even slightly above in certain areas. Okay, sort of pulls and takes. And the AI revolution on the enterprise goes to Nvidia. The consumer AI revolution goes to Apple. 25% will access AI through an Apple device. So it just goes to my point, like, to focus just on valuation, that's how you've missed Tesla, Meta, Microsoft, Amazon, Nvidia, Palantir. Yahoo is a teenager earlier this year, despises senior citizen living in Boca at 75. The point is, like, that continues to sort of be the theme. That's why I always say the bears, when they're in their caves, they can see AI in the spreadsheet.
Last one, Dan. And I guess just speaking to the bears, probably wearing their Patagonia vests. Salesforce recently caught a downgrade that caught my attention. And what caught my attention here is, of course, Mark Benioff always coming on Yahoo Finance. I know you know the Salesforce team too as well, Dan. But this analyst made the case that they may not monetize AI agents damn near, if at all, this year. What say you?
Look, I mean, doubting Benioff, it's like doubting Mahomes or in the playoffs.
Or me,
I mean, the
or
point
me,
is,
or me, or me.
Or you look, it goes back to, like, look at that install base. Look at Agent Force. All of our checks are showing it is just early days in terms of how they're going to monetize. I think it's one of the best software plays out there. I mean, it's one of our top picks for this year. It goes back to, again, a lot of analysts, if they can see it in the spreadsheet, they're negative. Betting against Salesforce in the AI revolution, it's just, to me, it is the wrong bet, because I think it's one of the best plays as this software age takes off in 2025. I'm not going to say we're not going to have some white knuckle moments. But the reality is that this is year 3 of what's really going to be a 5-6 year tech bull market.
Yeah, quick plug. I'm getting ready to head to the World Economic Forum in Davos. We'll probably talk to Mark Benioff, but he uses that forum at Davos really to the deals that he signs, how busy he is there. Keep an eye on Salesforce in the weeks to come. Dan Ives, you were the man. Thanks for always making time for the opening bid community. We appreciate you. Good luck in your travels, and always good to talk to you.
Great. Thanks for being here. We are Penn State.
Nice. Dan Ives over at Wedbush. Thanks so much. And that's it for the latest episode of Opening Bid. Be sure to hit us with those 5 stars on Spotify and Apple Music, the thumbs up on YouTube. Drop comments all over the place. I love answering them. I love reading them, because that's ultimately what helps make people become better investors. We'll talk to you soon. On the